Welcome to the History of Audit. At Mazars, we're proud to be auditors because of the important role it plays. To understand its importance and why we do what we do, it helps to know something of the history behind audit's development. The first references to audit are around the time of the Roman Empire, some 2000 years BC. The emperors appointed bright and ambitious young men that they considered trustworthy as quaestors. The quaestors were sent to the corners of the Roman Empire to ensure the governors who ruled the provinces were spending the money that Rome had sent correctly, the assets that money had bought were protected and looked after and existed, and importantly, that the taxes the governors were due to collect and send to Rome were being collected and were being sent to Rome without the governors taking a slice off the top. So a theme starts. Somebody, in this case a ruler, appoints someone they consider trustworthy to verify financial expenditure, assets, and that there's no fraud. Moving on some 3,000 years to Henry I of England. It was Henry I who first used the word audit, which actually means to hear. Like the Roman emperors, he sent auditors to the corners of England to confirm that the barons who ruled on his behalf those areas were spending the exchequer's money as it should do, that assets again were protected, and that taxes were being collected and sent back to the king. The key development, though, that created audit as we see it today was due to the Industrial Revolution in the late 1700s. For the first time, investors became part of the business process. But investors will only invest money in something they believe is safe and they understand. So they appointed people they considered trustworthy, often business associates and friends, to verify that the information being provided by the management, the people behind the potential business, was, well, to use modern terms, true and fair, something they could rely on. So there we have it. Audit today remains about this. Someone trustworthy, reporting to investors, note not companies but investors, on financial information prepared by management and whether that information is reliable or, again, to use the terms, true and fair. Of course, audits developed further. The stock market crash in the US in 1929 resulted in a lot of new regulation. From then, auditors needed to be professionals, qualified, not your friends. It also brought around a much greater focus on the profit and loss and financial reporting of performance. The development of computers and computerization enabled businesses to become truly global and truly massive. And we had to adapt our organisations and techniques to respond to this. Auditing scandals in the 1980s and 1990s brought further regulation. But one of these scandals, Enron, demonstrates the importance of being trustworthy. Enron were audited by Arthur Andersen, then the largest and most financially successful audit firm. Because one of its partners was deemed complicit in such a large accounting scandal, it lost its reputation, and so it ceased to exist overnight. It was no longer considered trustworthy. Hopefully that will enable you to understand a little bit why we at Mazars place such an importance on maintaining really high standards of integrity, independence, ethics and technical competence. Final point, though, is that history has shown us we exist only because others, initially rulers, authorities, private individuals, and then investors, wanted us to be there. But they only want us if we are trustworthy. At Mazars, we're proud to be seen as excellent auditors, because we're trustworthy, because the role is so important in the economic cycle and the operation of the world in many ways, and we're committed to keeping our standards at the very highest.